Is Bitcoin on track to hit $100,000, or are we about to get smacked by a brutal correction first? The signals don't lie, and right now they're flashing something serious. So in this video, I'm breaking down what the log growth curve and power law oscillator tell us about where we are in the cycle, why the Mayer multiple shows this isn't 2021 style mania just yet, and the key short-term indicators flashing a likely pullback before the next big move above 100,000. First up, let's have a look at the log growth model, which gives us a solid framework to understand how Bitcoin's price has evolved over time. It's a time-adjusted regression that estimates Bitcoin's fair value right now to be around $82,000. At the moment, price is trading about 18% above that trend line. The model accounts for Bitcoin's slowing growth as the market matures, and that's a natural result of its fixed 21 million coin supply and increasing adoption. While linear models miss the nuance, log regression captures both the explosive early moves, like that wild 2011 rally from $1 to $32, and the more measured climbs we see today. So, an 18% extension above the fair value line is slightly elevated, but it's nowhere near euphoric. Historically, we've seen true market tops happen when price stretches 50% or more above this curve, like the 2017 peak at $20,000. On the flip side, when price dips well below the trend line, like in the 2022 lows around $16,000, it's often signaled a solid buying opportunity. The beauty of this model lies in its simplicity. It distills Bitcoin's long-term value story into a single, easy-to-track curve. Right now, that curve is telling us this cycle still has room to run. Bitcoin's network is stronger than ever, with hash rate and security continuing to rise. And that just reinforces the long-term signal. This protocol's not going anywhere. The power law oscillator gives us a different angle on the same story. Like the log growth model, it looks at price relative to time, but this one compares Bitcoin's current price trajectory to previous bull markets. Right now, it's showing that this cycle, while impressive, is still within historical norms. In other words, we're not at the extremes just yet. It's got more room to move before reaching the kind of blow-off tops we saw in the past, like that 20 times run in 2017. This indicator works by normalizing Bitcoin's price against long-term trends. And what it shows is a market that's growing up. It's being shaped by institutional adoption, improved security, and wider recognition, not just retail hype. And that's why we're not seeing those crazy vertical moves that tend to end badly. The bottom line is that the oscillator is saying Bitcoin's in a strong bull phase, but it hasn't gone off the rails yet. This run feels more grounded, more structured, and that's what you want to see in a maturing asset. So, those are the macro lenses. But how does this cycle compare to past bull runs in the middle of the action? One of my favorite tools for that mid-cycle view is the Mayer multiple. It's super simple. It's just Bitcoin's price divided by its 200-day moving average. Right now, that number is sitting at 1.07. That's bullish. It means price is above the long-term trend, but not by a crazy margin. Historically, when this multiple climbs above 2.4, that's when things start to get frothy. That's what we saw during the 2021 bull run. And when it drops below 1, that's usually the market bottom, like we saw in 2022. So at 1.07, we're in a healthy zone. It suggests Bitcoin is in a strong uptrend, with plenty of upside still in play. One reason this metric is so powerful is that it smooths out the noise. It cuts through the daily swings and shows you how price is behaving relative to the average long-term cost basis. For example, back in 2020, the Mayer multiple hit around 1.5, and not long after, Bitcoin tripled in price. The 200-day moving average also works as a kind of dynamic support. It reflects what long-term holders have paid, on average. So, when Bitcoin's above that line, it usually means strong conviction among serious investors, not just short-term speculation. So, the takeaway here is that the Mayer multiple confirms this bull market is real and intact, but not overheated. Which brings us nicely to the technical structure behind all this price action. From a technical standpoint, Bitcoin's market structure is still very bullish. The volume-weighted average price basically shows where serious buying interest is happening, is pointing to strong accumulation, especially by larger players. We're also seeing the Bollinger Bands expanding. That's a classic sign of a trending market. When those bands widen, volatility is picking up, and usually in the direction of the trend. Now, short-term oscillators like the Stochastic Relative Strength Index are starting to show overbought conditions on the lower time frames. What does that mean? Well, it just suggests momentum may pause here. That's not bearish. It's just the market taking a breather after a solid run. This divergence tells us the structure remains strong, but we might be due for a short-term pullback. And that leads us perfectly into one of my favorite short-term tools, the mean reversion oscillator. I love this one because it helps spot overextensions after a big move, up or down. Right now, it's flashing signs that Bitcoin is overstretched on the lower time frames. Price has surged well above its statistical mean, which historically signals the potential for a cool-off or minor correction. That doesn't mean the bull market is over. It's actually a healthy sign. Corrections are how markets reset and shake out the weak hands, especially those using leverage. These kinds of moves are consistent with previous visits to the dark red zone on the oscillator, areas that often precede short-term pullbacks before a bigger breakout. And if history repeats, we could see a dip that sets the stage for a move above $100,000. That's what this indicator is really good at. It reminds us that volatility is normal and that Bitcoin often moves in waves, not straight lines. A reset here would actually strengthen the overall trend. So that brings us to a key question. Where could Bitcoin actually go next? That's where the Z-score probability waves come in. This tool gives us a statistical framework for short-term price moves based on standard deviation bands. Right now, the model is pointing toward the 0 sigma mean reversion zone, which is around $87,000. That's statistically the most likely next stop, especially if we get that pullback we just talked about. But if momentum ramps up again, and Bitcoin punches through into the +3 sigma band, which it's definitely capable of doing, we could be looking at a breakout toward $103,000. These outer bands are where speculative excess tends to peak. Historically, Z-score bands have been great at spotting turning points, both tops and bottoms. So they give us a roadmap of sorts, where price could go, and how extreme those moves might be. Right now, if Bitcoin cools off a bit and reverts to the mean, $87,000 is in play. If it accelerates, $103,000 becomes possible. Either way, this model helps quantify the risk and reward, which is key for anyone trying to position ahead of big moves. So, to wrap things up, what do all these indicators really tell us? Well, the big picture here is that Bitcoin still has room to run. We're not seeing the kind of euphoric price action that's historically marked the top of bull markets. Models like the log growth curve and the power law oscillator show we're extended, but not dangerously so. That suggests this cycle isn't done yet. At the same time, the Mayer multiple shows we're in the thick of a healthy bull run. Price is sitting comfortably above the 200-day moving average, but we're not in that speculative blow-off zone like we saw in 2017 or 2021. That said, in the short term, the market does look a little stretched. Indicators like the mean reversion oscillator and Z-score probability waves are pointing to a likely cool-off, maybe down to around $87,000, before we see any sustained push toward six figures. That wouldn't be a sign of weakness. It's more like the market catching its breath. These kinds of corrections help reset leverage and build a stronger base for the next leg up. So overall, the signal is bullish, but with a reminder that even in an uptrend, Bitcoin rarely moves in a straight line. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.